Hello guys, welcome to the Trading Parrot. I'm gonna do the market open update very quickly, starting with the 4-hour time frame. Let's have a look at the RSI. What have we got in here? Number one, we have the stop at 69 that hit the top resistance based on this line that starts from 17th of January. We hit it on the all-time high. Then later we hit it on 2nd of March, and that was Wednesday. Since then, we said that we are gonna have some pullback because that most likely is the top of the channel, and we are gonna create a new wave down in here towards support. That support, we state that most likely is around 43. I will say today is inclining more towards 44 or even higher. So we're gonna update those numbers to identify support on the 4-hour, and after that I'm gonna mention as well what could happen if now it kicks back with a move to the upside. So first of all, let's calculate that 44 in the price to see where is support. Very important to identify it. At the moment, 44 is around 83k, 83.2. Yesterday we were talking about 82.8, I believe, but of course it's a moving target. And we also have this VWAP that I connected with the bottom of the price, the close actually reading, and that was coinciding perfectly at 82, 900, 800. And we say that most likely the price is gonna go back to the median to basically reset, and it has done so far a move to 83,900. So there's still 100 to go. Maybe it's gonna meet up with the first fair value gap on the lower end. At the moment we have two bottoms in here at 83,600, and let me claim some victories this week, because if this is the first video you're watching this week about Bitcoin with me, you probably missed a lot, starting with the video where I say that both sides are a screw. And let's see if I can find that one. Short well, watch out, and then the symmetrical triangle fake outs. That's the side, that's the moment 3 days ago we started saying that both sides were going to get smashed. Then we said both sides are screw in the next 48 hours. I gave you timing as well. Then we talk about I'm planning to exit, and then I say shorts are trap, longs are next. So step by step. Then time sensitive information, that was my actual exit, and then the day after the correction. If we look at the price action in here and the timing of those videos on the 4-hour time frame, when we were inside the symmetrical triangle, we identified the opportunity. The opportunity was based on previous performance during the same time. What did we do in a symmetrical triangle last time? Well, we went down, we broke down, but that was the final breakdown. There were plenty in here of fake outs. The triangle was way thinner before, and we started expanding it, and that is a consequence of just trapping more longs and shorts to get them both squeezed. And that's what happened in here as well. We had a breakdown first when the line was like this. That was the first fake out. Then we have a second expansion with this fake out in here that actually say we're going lower. We were still inside the triangle, and we were already saying, maybe we're gonna go lower, but that could be again another fake out. We went to 81k, and we say, hold on the horses, because so many accounts, the damn large accounts, are constantly saying, well, now we're going to 75, that's an easy short. I saw one dude that has 1 million subscribers saying that's an easy short, yeah, breakdown from a triangle. And I say, oh, no, watch out with the kick back to the top of the triangle. And that's why I held my long from 77. I held here, I passed the test, that went up, and we took profits at 87.5. I did that. I needed to go to sleep. I knew that there was a chance to go to 88, and I mentioned, you guys, if you want to take the risk, go to 88. That is not for granted. We did go to 88, and we still came back to where we start the week, which is the median of this triangle, the center line of the triangle. That's where we are. So pretty much fake down, fake up, and back to the median. That's where we are, and that is also confirmed by the RSI being at RSI 47, which is the median of the statistics. And let's put back the line where we have it right now here. So that is our support, and we're heading to that 43. If we were now to kick to the top, if we were to go to 63, 62 and hit this line, notice that this red line has no second pivot. So we cannot assume it's here, is there. I'm just placing it randomly by eye, call it experience, maybe an average of the slopes that we have here and here, something like that. So we go up, we meet at 61, let's say 61. And why is that that important? Because remember, RSI tracks closing prices, not highs. So this RSI that went to 69 is not thanks to the high of 87.5. It's thanks to the closing price of 86.8. Keep in mind that that's an important detail. So if now I put 61, that says something about the closing price that we could reach if from here we go straight up, and that is 86,700. But that doesn't cancel the idea that the wick goes beyond that. So you can still get a higher high in here with a closing price that is below the other one. And why is that important? Well, because that can form bearish divergence where we still take liquidity from the top while still in a channel down. So both sides are happy, and you will say, how come we went to 80 something, 89, and we were in a channel down? You say we were in a channel down. Yeah, momentum and of the closing prices, not of the highs. Of course, we can always change the RSI to track highs, but let's leave it fairly simple for now. So why this matters? Because there can be a kick up that can be higher than 87 and we still go lower. So if you are shorting or you are already in a short, I wouldn't short from the median. I wouldn't take a deal from the median where I don't have any advantage on any of the two extremes. Support or resistance. Median, it can go anywhere, right? So we are in the median, and if you are already in a short, you might be thinking, what if they take my stop loss now? Yes, they can. Literally, they can. We've been going down from 70 or 69 all the way to 47 without any kickback up. So a kickback to 61 with a wick up can still take your stop loss in here. So what about taking support now? Going to support. Well, we could go after that, or we could continue slowly creeping into support with the low volume of the weekend. Fridays, there's been a couple of Fridays, if I remember right, that we've been pumping on a Friday. So that's why I'm making you aware of that one, because they can hit your stop loss and then we still go and we stay in here for the whole rest of the week. Important insights that you can take into account. I'm sure they don't matter to everybody, to all setups, but some setups are going to appreciate that. The 43, that is our support. Let's identify it in the price as well. 43, that is around 82.9. I already did, I forgot. It's consistent with the VWAP and with the fair value gap. So we will keep track of that. And let's see the daily. What's going on with the daily? Well, the battle continues around the 200 MA. Last night we closed below it. Now we have it as resistance. We also have as resistance the 84-200, but Friday can change things again. Remember, we recover from this low end, so theory says we need to go there. We've been a couple of dollars away from that, but does that mean that we cannot do one more candle like this? Yeah, sure, we can do it, and we can do it on a Friday. It will resonate with the typical recent Friday. If not, if that counts as we already did the due diligence of having claim, let's say here, we bounce from here to there, then from here to here, and now from here to there. So if this counts as the actual touch, not the base, but the top, then we are due to do another swing to another direction. That's something else that I'm keeping in mind. Last night, the RSI closed back below. We are pointing down. So far, this is looking like a rejection unless Friday wants to be the hero and close at a higher high relative to 49. So let's say today we close at 52, then we have kind of a confirmed upside. My preference is let's touch support, okay? We touch support on the 10th of March. Now we are at 21st. So it's been 11 days that we don't do anything with support. We just push and push and push and push. So it feels like all that open interest, if we clear it out in here and we test support, it will be great, whether we do it over the weekend or let's say we close today at this price and then over the weekend we dump into support and we start the week from there with a clear move to upside, hopefully supported by general markets. What else? Well, recently we had this MACD cross. So far things are looking okay. We are slowing down today, but not that much, I will say, in the momentum. We are still below the bull market support band. It seems to be resistance still. Let me see what else is important. Oh yeah, the CPR so far is acting as resistance. Remember, I gave you a heads up that pivots, the model say this is resistance. It still says that we could be going in March to 74.3. That's the model. That's what it's saying. It's not my forecast. I share with you the model. You do what you need to do with that. And there are no CME gaps from previous weeks. So if we close today, ideally, the ideal scenario from the point of view of the CME gap kind of strategy will be that that we close as high as possible, right? Like if today we close at 88, then over the weekend we can just clear what is it called, open interest on exchanges, and then on Monday we go back up to close the gap. That will be ideal scenario. Worst scenario is that today we close, let's say, at 80 or at 80.5 at a lower support after seeing some sort of rejection from 88 and being at the low 80s on Friday. Then that means that over the weekend we can just have a small pump, but then it gets sold out on Monday to close the gap. So that's the opposite scenario that we don't want to be having. Monthly again continues looking bad. I've been saying that in the recent videos. What else is important? Yes, long-term holders are pushing up. We have some readings that were quite aggressive to the upside, that accumulation that happened when the price was around 83.9. At the moment we are roughly at that price, so they are slowing down at 84.200. They kind of slow down the accumulation. It's very positive to see this, and it's very positive to see the opposite coming from the short-term holders. Yesterday I published a 1-hour video that if you haven't watched it, that's your homework for the weekend. There's so much alpha that is long-term, really important. The spread charts, the ratios, there's tons of things that I'm not gonna repeat today. The BTC ETFs spot, we can see that we have a streak here of green. Some good days, pretty good days, 17 and 18, 200s, 300s, kind of compensating a bit for the 400s 3 days in a row that we were having before. We are back in fear, even though we had the move yesterday that put us in neutral, but back in fear now. And liquidation levels, what's going on at the moment, I'm looking at that 80.5. That is interesting. If the market maker doesn't manage really to go there, then they can meet with 83. Notice that the trend direction strength has flipped now to number 2. Number 3 is the strongest trend that we had during this move up, and now we are having a number 2. So maybe in here there's gonna be just a hit of 82, 83, and then back up if we sustain the trend there. Let's see if we are accumulating something larger on upper lower side. 75 is heavy, and of course 79, 60, 69 around this area, and then the top above 100k. So that's more or less what we have. Let's look at the 30 days, how it changed. This is how it was looking yesterday. Let's see how it is today. And we got that 83,500 is the largest in the closest proximity, followed by 81. It's no longer like a flat thing. There are these two peaks. So alternative 1 getting into 83.5, alternative 2 to 81, but 79 is a bit stretching it just from the point of view of this recent liquidity pools. On the top end, we have the 87 that we just reached. That will be kind of the incentive to do that kick back to RSI 63 or 61 on the 4 hour. You can see that there is not much in between. So it's not an easy ride to get to 87, 88 at the moment, just because, you know, there's no enough oil in the way so we can slip to 88. And let's look quickly at the order book. You can see that currently we have funding rates in the negative. We are at 61 in terms of longs versus shorts. So being at the low end, it calls for a local top. Being on the bottom end, calls for a top. On the top end calls for a local bottom in the price. And we are kind of in the middle at the moment. So this guy is not going to help us today. It did all over the week. All week it was really helpful. So no complaints. And bid versus ask has been so stupidly flat in this area. And remember, if we go beyond 0.2, we start saying, okay, that can turn into a local bottom, or red is local top, but it's so flat we cannot use it today. Liquidity of the past month again highlights 75, the 67, and the 100k. And yesterday I published a video calling it the ugly truth. And in my opinion, the ugly truth is that now we need to marry one side, right? Are we gonna be fearing the 67 and then we don't take a trade to 100k, given that liquidity is coming in from M2 and from the balance sheet that today I have a new reading? Let me show it in a second. Or are we gonna think we're going to 100k and then we get a final flash to 68? Those are kind of the two scenarios that I'm playing with in my mind. Of course, there is just a flash into a smaller lower low, like going into 75 point something. At the moment, the longs are the ones at higher risk with just 246. So we have flattened a little bit the 400k we had yesterday at the highs, which is helpful healthy, but this indicator by itself still points out that there might be a little bit further down incoming, not guaranteed, but that could be enough just to get us into the VWAP, into the support of the RSI, if we don't get pump Friday as we did in the past 2 or 3 weeks, if I remember right. And I promised I was gonna show you the Federal Reserve balance sheet, and you can see in here that is printing a new candle to the upside, and this is now becoming serious, guys. So this could have a contraction now, possibly giving us a low. Ideally, it's gonna be a higher low relative to 3.18 trillion. So let's say we pull back to 336 after this. Of course, there's always the chance that the Fed is really taking serious the quantitative easing and that they print the next candle out of my forecast area, and even more optimistic than I ever thought, in a similar fashion that we did in 2020 and 2021, which really did help putting those legs to the upside in the rally of Bitcoin back in the game. So now we have two strong forces, the M2 liquidity global and the Federal Reserve adding and adding week by week. This has started on the 3rd of February with this higher low, but actually we've been monitoring this since mid-November, calling for a breakout of this. So you cannot complain in this channel that we are not speculating towards the right direction of liquidity with at least these two pieces of information and the double bottom that we were also speculating and hoping for. At this point in here with this high, we say let's get a double bottom. That is my job, and I hope you're appreciating the content. If you do, and if it's helpful to you, a comment down below is a must to pay back if you feel like doing so, a like, and of course subscribe, hitting that notification bell. Guys, don't forget to join my trading competition. I can see that there's already tons of people. I'm really happy. There's $5,000 on bluffing. The link is at the top of the description. It ends in 5 days, 11 hours, so there's still time to join my team. Yesterday we have the first elite TA session, a private session where people that join my Patreon with the elite tier are more than welcome to ask any questions and request their tokens to be done TA, and in a live small group of 10 people. Yesterday there was like 5 people live. The rest of the people are gonna watch the recording. We're requesting their preferred coins and asking custom questions, which I was constantly being able to answer. That video is going to go live today for the public, so anyone can watch it. If you find that that is useful to you, you know that the link down below to join my Patreon. Just make sure that you pick the elite if that's your preference. If you just want the articles summarizing my thoughts and my videos, thanks to my team helping me with that, that is the lowest tier, and you get all the information in your email. I know that people are also appreciating that one. Thanks so much, guys. I'll see you later. Have a great Friday. Bye bye.